Do you want to know ways in which you can limit taxes on your Social Security benefits? Well, if you do, we're going to talk about 3 practical ways in which you can do so in our Tuesday tips, so stay locked in. Hi, my name is Carson Graves, Certified Financial Planner and President and CEO of the Retirement Education Center, and I want to welcome you once again to our Tuesday tips, where today we are going to be talking about ways in which you can limit the taxation of your Social Security benefits. Now, when we're talking about your Social Security benefits being taxed, I can tell you that's always a very sensitive subject for our clients because, believe it or not, even to this day, many people do not realize that their Social Security benefits can be taxed. And of course, it goes without saying that most of these people do not know how much of their benefits can be taxable. So today, what we're going to do is give you 3 practical ways in which you can either eliminate or lower the taxation of your Social Security benefits. So let's go ahead and jump into our lesson today. So when it comes to Social Security being taxed, one of the things you have to know is the tax bracket for each category. So for a single retiree, if you have income between $25,000 and $34,000, you can be taxed anywhere up to 50% to 85%. So basically, any income between $25,000 and $34,000, you can be taxed up to 50%, and any income above $34,000 as a single retiree, you can be taxed up to 85% on those benefits. Now, when it comes to a married couple, it changes. The brackets are between $32,000 and $44,000. So anywhere between $32,000 and $44,000 of income, up to 50% of your Social Security benefits could be taxable. Now, once you are above $44,000 as a married couple, up to 85% of those Social Security benefits included in your income can be taxable. Now, when you are calculating the income to determine how much of your Social Security benefits are going to be taxable, this is how they're going to look at it. They're going to include all of your income, everything, including your tax-exempt interest from those municipal bonds. Yes, typically, interest from any municipal bonds are going to be tax-free, but when it comes to how they look at how much of your Social Security benefits can be taxable, they are going to include that interest from those municipal bonds in your income to see how much income you're going to have for the year and determine how much of your Social Security benefits are going to be taxable. And they are going to include half of your Social Security benefits in that income calculation to determine how much income you've made during the year. And we're going to show you in just a moment how that is going to play out when it comes to your Social Security benefits being taxable. Now, one of the things to make sure that you make note of in this video is that Roth IRAs, the income distributions from any Roth IRA, will not be included in your income calculation. And we're going to also point out in this video, if you wait to the end, how that also can play out in helping you reduce or eliminate the taxation on your Social Security benefits. So now let's talk about some steps that would help you minimize the taxes on your Social Security benefits. So let's talk about practical step number 1. The first step you can do to help minimize taxes on your Social Security benefits is just go ahead and consider reducing or eliminating some debt and expenses before you retire. So what is the logic behind this particular step? Well, obviously, if you have less debt and less expenses, it's going to reduce the pressure of you needing more income during your retirement. And if you need less income during your retirement, of course, it's going to decrease your tax burden overall. So one of the things you can do to help yourself and reduce taxes on your Social Security benefits is try to reduce debt or expenses before you retire or start taking those benefits. So let's look at a second practical step that you can do to help minimize taxes on your Social Security benefits. One of the things you can do to help yourself here is to delay your Social Security benefits until age 70 or at least as late as possible. So what is the logic behind this particular theory here? Obviously, if you delay your Social Security benefits longer, it's going to result in a higher income later when you start taking said benefits. And of course, if you are going to have a higher Social Security benefit later in your retirement life, it's going to lead to you needing less income from your other retirement income sources that might be taxable. So let's go ahead and take a look at a quick example here for a single retiree. Let's just say this retiree is needing $4,000 per month or $48,000 per year for income. Let's just say hypothetically that if they started their Social Security benefits at age 62, that benefit would be $1,400 per month. But if they waited to age 70 to start that benefit, that Social Security monthly benefit would be $2,480 per month. Now recall, if you're a single retiree and you have income greater than $25,000 to $34,000, up to 50% of your Social Security benefits can be taxable, and anything above that, up to 85% of your Social Security benefits may be taxable. So let's go ahead and see how this plays out. So the annual income needed, $48,000 per year. The annual Social Security income that you'll receive at age 62 will be $16,800. Now, that's going to require you to take from other income sources, maybe other taxable income sources, of $31,200 to get to that $48,000 of income. Now here, your taxable income is going to be one half of your Social Security benefits, so one half of the $16,800, plus all of your taxable income from other sources of $31,200, for a total taxable income of $39,600. In this equation here, as you can see, that is above the $34,000 threshold. So taxes on these Social Security benefits in this particular example will be up to 85% taxable. Now let's go ahead and continue our discussion from practical step 2. Let's say in this particular example, the income is still the same, needed at $4,000 per month. We know that if they started their Social Security benefits at 62, it was $1,400 per month. But if they waited to age 70, it was $2,480 per month. Also recall, between $25,000 and $34,000, we know that that income can be taxed anywhere from up to 50% or as high as 85% taxable on those benefits. So let's look at the same exact situation here. Income needed is $48,000 per year. But now we're going to wait to age 70 to start those benefits. And at that point in time, the annual income at 70 will be $29,760. So now the other taxable income sources that we need to pull will only amount to $18,240. So we're going to take one half of our Social Security benefits again in our income equation of that $29,760, plus all of the taxable income from the other sources. So now we're looking at a taxable income of $33,120 per year. So now we can see that we're in the threshold between $25,000 and $34,000. So instead of 85% of our Social Security benefits being taxable, now we will have up to 50% of that Social Security benefits being taxable. So we've already reduced our tax burden just by waiting and delaying our Social Security benefits to age 70. So now I want to go one step further to practical step 3 to see how we can minimize taxes on your Social Security benefits. One of the things that you can do that will give you a huge advantage in reducing taxes on your Social Security benefits is to consider converting your traditional IRAs to Roth IRAs. And I'm going to show you exactly how this may play out. The logic here is that any distributions from a Roth IRA will not be included in income and will not be taxable. Now, the optimal time for you to do a Roth conversion is after you retire, because at that point you will perhaps be in a lower tax bracket. You also can do a Roth conversion when you're particularly in a lower tax bracket. And you should also consider doing a Roth conversion before you start taking your Social Security benefits, because if you happen to have a higher tax bracket due to the Roth conversion, you don't want to push your taxes into a higher tax bracket and end up causing more of those Social Security benefits to be taxable. So let's go ahead again and take a look at our example that we had before. We had our single retiree who needed $4,000 per month, and we were looking at them starting their Social Security benefits at age 70 to help minimize those taxes before, where they were going to receive $2,480 per month. Also keep in mind of our tax bracket here in order to push our Social Security benefits up to 50% to 85%. So in our example, this retiree needed $48,000 per year. The annual Social Security income at age 70 was $29,760. Now we're going to have Roth income. We're going to have this income come from a Roth IRA. we're going to need $18,240 like before in order to get to the $48,000 per year of income needed. Here, we're going to still use 1/2 of our Social Security benefits in that income equation of $14,880. That's half of the $29,760. Now, the taxes on our Social Security benefits, because it's below $25,000, is zero. 0% of your Social Security benefits are going to be taxable. As a matter of fact, the taxes on all of your income at this particular junction will be zero because that money is coming from a Roth IRA. So you literally have reduced not only your Social Security benefits taxes to zero, none of your income of that $48,000 is taxable. Thank you again for tuning in to our Tuesday tips. Please note that the information shared in this video is for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today. And we would also like to hear from you. Let us know what strategies you may be trying to use in order to reduce the taxation on your Social Security benefits. And if you found this information to be beneficial, all that we ask is that you subscribe to this channel, like this video, and share it with others.